Evening, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, July the 30th, 2025. U.S. stock market has been closed now for almost 5 hours. I was out doing some stuff with my family when the market closed. I was watching it. I was watching everything that happened after the Fed announcement and after Jerome Powell's comments today. I just haven't had a chance to get online until now. So getting this out a little bit later than I otherwise would have liked to have done. But in spite of Jerome Powell doing his absolute best to think the stock market, um, after the initial drop from his comments, and it was a pretty sizable drop, the Dow, I know at one point in time, the Dow Jones Industrial Average was down, I want to say a little over 350 points. I might be off on that a little bit, but it came back quite a bit in the last little bit of trading. Here's a 1 day chart, and you can see that right here is when Powell started to make his comments, and the market really went in the tank. It wobbled a little bit, but just literally in the last 15 minutes, the market was open from these lows that had the Dow Jones, like I said, down around 300 points, or 350 points or so, ended up down only 171. So the day was kind of salvaged right at the end. I think a lot of people suspect, if not outright realize, that in part what Jerome Powell is doing is political. Um, he may believe that not raising rates is the correct thing to do. I don't know that I would 100% argue that we need a rate decrease right now. I told you in a podcast a few days ago, I could make a compelling argument um, for either way, for the need for a rate cut or the need to keep rates where they're at until we are a little bit more certain that inflation is not going to be a near future problem. It's a tricky spot, but when he started making his comments, he has this defiant tone, and there's a lot of hubris there. I do believe Jerome Powell is arrogant, and this feud that he's having with Donald Trump, and it's not to say that Donald Trump doesn't struggle with the arrogance as well, but Donald Trump is the president of the United States and the head of the Republican Party. You expect him to be political. The Fed chair is supposed to not be political. And I believe it's impossible for Jerome Powell to not let his comments um, reek with politics and with his dislike for Donald Trump. He won't mention that specifically, but um, he wants to keep saying that tariffs are what he's concerned about. I'm not going to sit here and suggest that there are not some things to be concerned about as far as inflation goes. I don't think tariffs is the valid argument. And I'll say it again, I've said it many times. The proof is in what happened in Donald Trump's first term and what has happened so far. And the naysayers are wrong over and over and over again. They are wrong about tariffs. And I'm becoming more and more entrenched in the camp of the tariffs are not going to be the cause of inflation. There are other things that could cause inflation, and it's got to be kept. It's got to be watched closely. So again, I don't know that I'm against keeping the rates where they're at and not over projecting a rate cut in the next one or two Fed meetings. But the way Powell goes about saying that, you can tell he's trying to stick it to Donald Trump, and as a result, stocks and traders and investors, at least temporarily, suffer a little bit. I think the fact that this market rebounded a lot from how low it was at one point speaks volumes to the fact that the market is still in good shape. Doesn't mean we couldn't continue to pull back a little bit. It would not be a bad thing for the S&P to maybe back off down here to around 6,300 and just get out of this overbought territory. then you could have you can have a pretty sustained upward movement without, excuse me, without ever going into overbought territory. But when you get into overbought territory, it signals, amongst other things, that maybe it's time for just a little bit of a pullback, a little bit of a correction. So I don't think that would be a bad thing if it happened. But we'll see. Um, I want to spend the rest of the time talking about a couple of trades specifically on the triple play side of things. So on the spread, on the SOS spread trade side of things, our profits are looking fantastic. I do not have the QQQ trade in here, but we set the expiration out a little bit farther on that one. CrowdStrike is down and it continues to be down, but we're clear out in October with these options. And each day we lose a little bit on CrowdStrike, we're more than making up for it on Nvidia. So much so that with Palunteer now closed, Nvidia is carrying the load, but we're having just a phenomenal year with our spread trade. A lot of it, no question, a lot of it is on the backs of the Palantir and the Nvidia trade. Our triple play trades are still doing good on the year, but there's no question whatsoever. I'm not going to sugarcoat it. We've hit a rough patch, and this happens once or twice every year. We hit a rough patch like this. We hit a little stretch where 3 out of 4 trades, lose some money, or 4 out of 5 trades lose some money. And I hate losing money on trades. We took a pretty good size hit on CrowdStrike. We're down on Tesla, although I think Tesla could still come back a long ways from how far it's down. Google is actually looking pretty good, and I think Google will get profitable tomorrow and Friday. And then MicroStrategy is just, man, that one has been um, heartburn like no other. I'm so frustrated with MicroStrategy. Uh, no question, I called it completely wrong on what I thought it would do. Right after getting in the money bull call spread, thinking it would easily stay above 420. It's just been on a slide straight down ever since then. Um, they report earnings tomorrow, and the reason you're getting this podcast without an adjustment on MicroStrategy is this. Here's what is going on. Well, let's talk about what we're going to do to fix this rather than what looks ugly about it. Because honestly, after earnings, MicroStrategies could pop back up above 420 so easily. It would be nothing for them to be at or above 420 first thing on the open on Friday morning. And I think there's a good possibility that's what's going to happen. But we absolutely unequivocally have to protect our downside. If MicroStrategies falls after earnings tomorrow, we've got to be protected. Here's the reason I'm not sending an adjustment tonight. And I know some of you are just hearing that for the first time, because just a little while ago on Discord, I said that I would be sending a couple of adjustments. Here's why I'm not sending one. After market trading shows MicroStrategies up $5.73, which is fantastic. To me, that just gets us closer to where 420 would not be even a stretch for it to get to on Friday if it continues up, especially if it does move up this far once it starts to trade tomorrow. We've got to do we've got to add some puts to the trade, either a long put by itself or a bear put spread of some sort. But I want to wait and do it after the markets open tomorrow, so that if this is not happening, if we're not actually getting this move at the open of the market, we can set the strike prices of the puts in the appropriate spot. If I send out an adjustment tonight, this disappearing by the morning, or being farther up, or being down, or being right in that spot, it could mess up whatever I send out. And I'll have to be sending something in the morning saying, okay, we're going to set the strike price this. So kind of like we do on most Monday mornings when we open new trades, whatever adjustment we make for MicroStrategy, we're going to make that adjustment tomorrow at the open of the market. Now, the same thing is true of Tesla. Tesla is another one that feels like a thorn in the side. Tesla spent some time to the upside briefly today, but mostly was to the downside. But I think Tesla's it held above 317.50, which is what we need it to stay above for the next couple of days. But if they bounce even just a little bit, I want to take that 317.50, 315 bull put spread we have and roll it out a week or two and get some more credit for it. That's my plan with Tesla. So again, I got to wait until things open tomorrow and see if we're going to roll it out for some more credit, or if we need to make a different adjustment. So even though we've got, I'm not worried about Google. Google's going to get profitable. Um, Microsoft hit a home run. They are way up aftermarket. It looks like they're going to skyrocket up above the strike price of our short call. So I think we're going to be in wonderful shape on Microsoft. Etsy had a really nice gain today at the open, and then gradually throughout the day, it just, I mean, it opened up, it jumped way up here, and then just steadily throughout the entire day, it gave it most of it up. It still had a finish to the upside. It doesn't have to go up a long ways. All it's got to do is get back up here. And I think if we give it another day of trading, we're going to see that happen. Big volume today. The fact that it finished clear down here, I think people are going to see the upside to this and jump in tomorrow. So, like I said, we've got a few things that are not looking great right now on the triple play side, but I think every single one of them could be moving in the right direction for us tomorrow. And we could see, that the loss that we're showing right now on MicroStrategy could disappear completely. I think we will eliminate most, if not at least half, if not more, of that loss on Tesla. And then Microsoft looks like it's going to be a home run. So I know earlier I put on Discord that I was going to send some adjustments tonight. As I kept looking at everything and kept looking at where we were at with everything, I realized I really can't send these adjustments until the markets are opening tomorrow. So I will be online an hour to 30 minutes before the markets open. I'll stay online until we've got everything adjusted. In the meantime, hang in there. Have a great night. We'll see you. We'll be back tomorrow. Okay, bye.